How's it going, everybody? This is BeatTheBush. Today I'm going to talk about dividend investing and how I personally do it. Now, before I begin, I do have to have a disclaimer in that all these things I'm talking about, these different stocks, is just my personal opinion. You really should not go and invest in these without doing your own research and doing your own thinking. Stock prices, including dividend investing, can go up or down in value. So whenever you buy, just remember that you are fully responsible for your purchase or sales of an asset. So I'm just going to look at my Webull app. This is a free stock trading platform. If you guys are interested, I'll leave a referral link down in the video description below. I think you can sign up for this. If you deposit $100, you eventually get like 2 free shares of stock worth up to $1,000. Here's my watch list. It's not every single thing that I watch. I think every single person has a limited amount of time. So you can't expect to be able to watch like 300 stocks, and you cannot also expect to hold every single one of them. Expect more like you're gonna look at 50, 100 of them, and then you're gonna invest in a subset of these because you think that they are very attractive in terms of buying. Right off top, I'm just gonna tell you all the stock ticker symbol I'm gonna cover in this video, which is IXC. This is a global energy ETF fund. PCK, which is California municipal bonds. It's advantageous as a Californian to invest in this because it's essentially tax-free for the federal level and at the state level. So this is very important if you're trying to earn income and not pay any taxes. And the third one is IRM. IXC, I think right now they're paying about 4.5%. Although if you go on the Apple app, it might say like 7%. There's something outdated about that over there. So it does not exactly say. On this page over here, if you scroll down, it says year-to-date yield minus 8.92%. Because the stock price used to be like $31, it dropped to $28.50 or so. And I thought this was probably on the low end, and so that's why I bought into it. And I do not think that it's actually gonna come up very, very soon. You have to wait until all this coronavirus, dies down and stuff. Maybe it's gonna get worse even. At $28, it might just drop, like a bottom fall out or something. I don't know. It might go down to $26 or whatever, but that would be like an even lower low than, if you look at the 5-year chart over here, it's gonna break below the minimum 5-year mark. 6/16 2019 and 5/15 2019, they earn about 70 cents in each, so they're paying out 2 times a year. So $1.40 or so for the entire year, and $1.40 divided by 28 or so, it's about 4.5%. And here is what I feel is most important in terms of dividend investing. A lot of people, you might go on Google stock picker check thing, right? And then you can sort everything by the dividend yield. And sometimes you have stock that is yielding like 15%, 20%. And those things are kind of risky, right? Because they are such a high yielding stock for a reason. Whenever I see a really high yielding stock, it was because their stock price used to be, let's say, $10, and they were paying like $1, and then suddenly their stock price goes all the way down to $5, and all of a sudden now, if they happen to pay the same amount out, then now they're paying 20%. So I think looking at just the yield, it's probably a very, very bad idea. What I personally do is I try to buy an asset that is high yielding and that I think the stock price is going to go up. So I want double duty here for my money. I want to be able to hold this stock long term and receive a lot of dividends in the meanwhile. And I don't want to pay a high price for it. So sometimes the stock itself, it's very high price. An example of this would be AT&T. Stock ticker symbol T. Let me go and look for it. T. So I just added to it, go back to it. Okay, T over here. If I look over the 1-year period, it's gone up about 22%. I personally think that, telecom, AT&T, they shouldn't really move all that much. So right now it seems on the high end. So because to me, it seems like it's on the high end of the band of, how much you should pay for an asset. I tend to avoid this, although I really want to buy into it. I do not think that it's going to go any more higher. And then if it appears low, then I would like to buy it. And I keep something else in mind because it's not just the dividend. I don't buy it to keep it forever. I would buy it and keep it as long as it stays somewhat low. And as soon as people get all crazy about the stock and it goes on the high end of this band, I tend to sell it. So within a few short months, I could be able to make like 10-20% or so. So I rather take my money out and try to find another a high value dividend paying stock, and then I put my money into that. So AT&T is one of these stocks that I kind of look at and go, okay, it's a nice dividend paying stock, and I just keep it in mind. I keep it on my watch list over here, and this is just one of the stock that I kind of take a look at every once in a while and then go, okay, if it's cheap, I'm gonna buy into it. So there's two different things, right? Like, if it stays cheap, I don't mind at all because I prefer it to stay cheap, and I can just keep on collecting the dividends. No harm done, right? The dividend on AT&T right now, it's about 5.4% yield. So I can just think of this as, just collecting money. But if for some reason, and there's always going to be one or two stock, maybe a couple, there's always going to be a couple of stocks that just kind of gets ahead of itself. So if I'm holding on to a handful of dividend paying stocks, anywhere between 4 to 7 or 8%, and if one of them happens to go up like 10-20%, then I can go, well, you know what, this is a little bit high. I'm gonna sell it, and I'm just gonna set it and forget it in terms of like sell it and not really buy back into it because I think it's high. Then I'm just gonna go look for some other better opportunity that has a really great value that I do not think that the asset price is gonna keep on going down. Another one that I think it's a little bit too high is PCK. I think this is actually fair market value. So this is PIMCO, California Municipal Income 2. Look at the yield is 4.62%. Now for PCK, there's a thing called NAV history, which is net asset value. It's if they sold all the assets they have, every share it's going to be worth about this much. This is not to say that sometimes a stock could go below this amount if there's some pessimistic thing about it. Maybe people are going to default on the bonds that they hold, because sometimes if these entities they go bankrupt, they cannot pay them back. Essentially, they have to write down these assets go to zero because it's not worth anything. So there is some risk. But bonds generally they waver less. They're a little bit less volatile. It's a different kind of assets. That's why they're called bonds. So anyway, I am really only interested in all of these different things really for their dividends. And the summary here really is that I'm only going to buy something that give dividends if it's really good value. If I'm not just going to buy it just only for the dividend and just go, okay, I don't care if it goes up or down. I do care if it goes up or down. So therefore, I want to buy things when they're down, and when they go up, I want to reap the benefits as well. So you can sort of think of this as putting your money on double duty, right? While it's sitting there collecting you dividends, you can also wait for the chance that one of these assets, all of a sudden, maybe some people are suddenly very bullish about this dividend stock. Then all this money flows into it, it goes up, then that's when you're supposed to sell, of course. So other than only collecting the dividend, you can also have the benefit of stock appreciation. And sometimes it's really, really lucrative to do this, because sometimes I would buy something and it jumps up in 10% in just 3 short months. So yeah, I'm gonna rather take 10% in 3 months rather than 5 to 10% in a full year. So I made money, 4 times faster this way in some off chance where, the asset value shot up. So going back, I'm also going to talk about IRM, Iron Mountain Enterprise Storage Solutions. You can see on the 5-year chart over here, it just goes up and down from 28 to 38 or something. Right now is around 33. The last time I talked about it, I forget how much I bought it for, like 31 or something. It went up by 10%. So I'm looking at my retirement account and I'm like, I just bought this a few months ago and it increased. I didn't even collect the dividend yet. My initial purpose is that it's low. I want to hold it for a really long time. I want to collect the dividend for a year or something, or even 2 years. That's my time horizon over here, and I wouldn't mind if it remains depressed, or even if it reduces about 10% or something. I'm just gonna wait around, because all this time I can collect the dividend, while I'm waiting, which is very nice. This is as opposed to if you just put your money in, let's say, a savings account, there's a whole different story why you want actual cash, right? But instead of just having the money sitting there, I'm deploying it to somewhere where this money is actually sitting there, and I'm collecting a nice dividend while I'm waiting around. So this is a kind of nice thing to do. So these are all what I currently on semi-actively looking at. I was purchased into AT&T probably 6 months ago, but I kind of sold out of AT&T after they increased in value, and I was about to go on vacation. So I'm like, I'm just gonna sell it so I don't have to worry about it going down. Right now I'm actually holding on to IXC and IRM. I don't hold any municipal PCK municipal bonds, although I really want to. If it comes down to, let's say, like $9, then I would look to buy that. IRM, I think if they go up too much, maybe like 38, then I would probably consider selling them, because this is kind of like a large cap stock. They don't move that quickly unless they're doing something, really amazing all of a sudden, some sort of game changing thing. But usually these big companies usually don't do that all the time. So I am, kind of eyeing like when it looks kind of frothy, when the value of the asset is kind of ahead of itself, and I don't think it's gonna stay around there. So therefore, that's just basics of selling high, right? I think it's high. I think it's high compared to the asset value, so I'm gonna sell. There's other random stuff on my watch list here, like FZROX, which is the Fidelity Zero Total Market Fund. They charge a 0% investment fee for the ETF in this thing. And then I look at VOO, Vanguard S&P 500, which also has a low ETF fee. I'm looking at Tesla, AMD, Microsoft, SPY, Gold. All this stuff was pre-populated, I think. So this was not my doing. Just a few shares that I'm looking at right now. And again, if you guys are interested in using this app to get all the insightful information, that's not always on, let's say, the Apple phone, where they have the typical stock ticker that you can track with their native app. It doesn't show you as much detail as this thing. So if you guys are interested, you can check out my referral link down in the video description below. You can get 2 free stocks after you deposit $100. I think if you sign up, you get 1 free stock, and then after you deposit $100, you get another free stock on top of that. So, this is free money. So thanks for watching this video, and I know a lot of people are going to talk about this Tesla thing, because right now, as I'm making this video, the stock price is $918. I sold around $895, and well, I have to, you can't feel too bad about it, because I made a lot of money, I think 300% or something. And whenever I make a video about, selling a certain asset, Bitcoin to be particular, people always wait around until, the stock price is always going to go up some more. I cannot time it perfectly. I don't have a crystal ball. I don't know when, if I always sell it and then the next day it just keeps on going down, then, I'm suddenly going to be recognized as someone that, whenever I sell, it would be like the signal. It's like, oh, you should do it right away, like right when I do it. But the truth is, the thing with these kind of sells is, even though when you think an asset is overpriced, it may remain overpriced for an extended period of time. And, just as long as the market is going crazy, it's going to remain there for a while. It might go up to $1,000 even. I sell mainly because I think in the short term, it'll go down. That's my assessment, and I'm just gonna go along with it. Thanks for watching this video. Don't forget to give me a like, comment down below. Let me know if you gather some of this nice dividend, because dividend is very nice. You don't have to do anything, because you just put money in, every few months you get some money. It's completely passive. You just gotta make sure that the asset doesn't go down while you're holding on to it. So that's why I watch out for these value dividend stocks. When they're low, they can actually increase in value rather than decrease in value. And as always, don't forget to push that subscribe button and ring that bell icon. Thanks for watching.